Good evening. This is Doc Severson for the TheoTrade report for Thursday, October 26. Okay, today was the day of reckoning for several tech earnings such as Google, Amazon, Microsoft, and Intel. And we can start to see some of the old guard versus the new guard in terms of the earnings reactions that we had. So first of all, let's go to Amazon. So Amazon is already up from about 972 at this point up to 1055, 1052. So up huge. Now, how is that in relation to what the market expected that? Let's go over to the trade tab, looking at Amazon, and the expected move into tomorrow, or 27 October, was about 36 points for a target of about 1,008. So if we put on the expected move plus minus 36.8 points, we would have an expected move target up to about 1,008. And as you could see by this chart, we just completely saw Amazon blow through this level and is running about 2 times that right now. So a huge reaction from Amazon. Profit was 52 cents per share, where I think the expectations were about 3 cents per share. So just completely stomped on the target. Let's go over to Google now. Google's up pretty strong right now, up about 30 bucks per share. And Google, again, the expected move here was about 38. So the target for Google was about 1029. So the upper one standard deviation move for Google, or the expected move for Google, was about 1029 to the upside. Let's see how we did there. And right now the price is actually inside of the expected move. Although the initial move here, and this could be very, very different by the time we get to tomorrow morning, but right now Google is inside of the expected move, even with that massive 30-point aftermarket move here. Now we get into some of the old guard, Microsoft. Let's look at Microsoft here. Microsoft has gone from about 78, 76. The expected move on this, we'll look at that in just a minute, was about 2.6 points. So the target for this was just a little over 81. So again, the expected move for Microsoft here was about 2.6 points. And so far, again, that one is inside the expected move, but up pretty strong at this point, up a couple of bucks right now for Microsoft. Microsoft just continues to be a juggernaut to the upside. But again, not quite the same reaction as we've seen from Amazon and Google. Now let's go over to Intel. So Intel reported earnings today. And that one started at about 41.35 or so before the market reaction. And as you can see right now, we're just about flat. So initial reaction was to the upside, but many times by the time that people digest the report, and then there's also the conference call, which can occur afterwards, things can move as well on the conference call. So right now, Intel's flat. Now looking at the overall Nasdaq futures chart here, we've seen from about the close today, we've seen in excess of about a 40-point move to the upside in the Nasdaq futures, although that right now is coming in a little bit. A lot of that is due to what we're seeing in Google. But overall on the S&P, so the S&P after all the market reaction here has only gone up from about 56 to 61. So that's only about a 5-point gap that we're seeing on the S&Ps. So again, this is what, about 37 minutes after all the market reaction and after the closing bell. So far, you know, somewhat of a positive reaction to the upside, but not stunning. What is stunning though is how Amazon continues to drive higher. So right now, if we look at Amazon, let's just say for even numbers that we're going to be around 1050 tomorrow morning. We are once again going to see Amazon tangle with the all-time highs, which were back here in the spring, or actually in the summer, in the mid-summer at about 1083. So once more, we're going to be assaulting those all-time highs on Amazon. Everybody's getting stuff shipped to their house, and as well as the Whole Foods acquisition has done nothing to change their balance right now. Now, don't forget, next Wednesday, we not only have Facebook earnings, but we also have the Fed in the afternoon. Not much is expected, but next Wednesday should be another big day of market movement. That is it for today's report. Thanks for listening. See you tomorrow.